1 minute mindset reset traders today. Great question from a trader. Can you talk about trades you've been stopped out on? Most of the trades that I take now, as you know, if you've been following me long enough, are trades that are about to accelerate or capitulate. So we talk about high a day, low a day, reversals. That's after they've locked in the high or locked in the low. M's, W's, three push patterns, and then adding to those positions. So typically, if I'm wrong, I will know right away. And I don't tend to often wait to get stopped out. I will close the trades. Now, if I'm getting in at the high of the day, at the timing window, US Open, London Open, again, typically these markets with time compression and everything else, I'm not looking to sell the high or buy the low. I'm looking to sell at the high when they've locked it in, or buy at the low when they've locked it in. So if it's a squeeze and I've got that wrong, I need to get out right away, because that market could be a measured move of that consolidation. So I don't tend to think about it. If I recognize that I'm in the wrong direction or that I've read that chart wrong, I can close that trade right away. I scale into most of my trades. So the first entry is designed to see price confirm that with its behavior. So if I'm shorting the market, I'm looking for that market to be dropping and pulling back. So if you were long on that trade, you'd be stressing, thinking I'm about to get washed out. Whereas if I'm short, okay, it's confirming what's happening. I want to add to that. So if I'm short and I'm wrong and I'm caught at the low of the day, which, you know, again, if you've read the chart wrong, or if I'm wrong and that market reverses quickly, I've scaled into that initial position, I'm going to close it right away. Because if it is wrong, and the times that I'm trading at, if the market's coming out of consolidation, it is going to go 3 levels in most cases, at least 50 pips, if not more. So I will close that trade. And if I've read that right, I'm prepared to close that with a small loss and get in the opposite direction, wiping out that loss and obviously still being able to come out green on the day. Now, I don't take a lot of trades. I used to take a lot of trades. I would trade. I've talked about this, trading, you know, just keep trading. Whereas now I'm looking to scale into trades depending on the setups. If it's a squeeze for a sizable trade, 3 levels, but I want to be out of the market with that trade. I know there's other traders that will continue to trade, and that's their prerogative. I'm looking to lock in that trade for that session or for that day, whatever, and walk away from the screen. I don't want to be on the screen afterwards. I'm looking for that 1 hour, 2 to 3 levels of movement and locking it in. Now, if it's a US session high low of the day trade, we see those on NASDAQ and gold, I may be there for a bit more than an hour, and I may look to re-enter into the new hour. If I'm in the first hour and New York opens, I'm out of the market, I may look for that New York open re-entry after the stop hunt, whatever that may be. It all depends on the setup on the day and the template for the week. So taking a loss, you've got to get it in your head. You can't wear that as a badge of judgment on whether or not you're a good trader. Again, I talk about trading setups, which is why I focus on setups, not trying to trade the direction of the market on the day. I'm only looking for setups. So, you know, I'm not going to say that I'm 100% accurate. And I've talked about, if I don't recognize something easy, I don't want to trade it. I've traded for so long now that, you know, trying to guess the move and everything else, you get into a position and immediately it's going against you. Why do you want to deal with that stress? I'm looking for markets that are about to blow off, whether that's for a long trade, a trend trade, a breakout trade, or a reversal squeeze. So typically, again, when these are set up right and you've been patient and you time the entries, there's usually very little stress in the trade. And I've, you know, done so many things wrong over the years. You know, somebody said something to me the other day, you know, again, I talk about, you know, the timing and everything else. I traded for 15 years and didn't make any real money. And so when somebody says that, I just say to them, spend 15 years at the charts. And if you don't learn something from that, you should go do something else. So when I say these things, I can tell you with conviction, the times, the hourly rotations, the 15-minute rotations, the time compression, and letting the market expand over the course of the day unless we break previous high or lows of the day. So people say, can you go over that? You're marking off highs and lows in the day. there's a high and low from the previous day. Those are your basic triggers. If you don't get there, then you need to step back, and you can trade these swings if you want, but the bigger moves will come as the market establishes a larger trading range. So anyways, if you get stopped out, you just deal with it. You got to ask yourself, did I take my trading setup? Did I execute the trade plan properly? Did I manage my risk? Did I enter properly? Did I exit properly or get stopped out properly? What could I have done better on the next trade? So, I mean, that's all you can do. You can't sit there and dwell and mope about it, because that doesn't help you. You have to have an actionable review process. And again, I focus on setups. I cannot emphasize that enough. Pick some setups. Know exactly what you're looking for. The timings, the variations, broken down markets. If they're broken down already, I want to short them. If they're bursting, if they're pulsing, if they're trending, I don't want to counter trend that. If the market blows off and gives me a reversal in the timing window as a stop hunt into trend traders who are chasing those moves late, so coming back to getting stopped out, I don't want to be buying on the last leg of a move or selling on the last leg of a move unless it's a blow off capitulation. Otherwise, you're going to get caught up high or caught down low, and those are the traders that are going to get stopped out when the timing window kicks in and the market reverses. So hopefully you got value from today's video, traders. You get stopped out, learn from it, take the loss. The best thing you can do is take the loss, get on with it, get on to your next best trade, execute as flawlessly as possible. Make sure that you have setups with edge. Have a great trading session, and may the markets go with you.